How 2025 shaped DeFi, stagnation, security, and a new direction. Introduction. 2025 was a defining year for decentralized finance. It was not a bull market driven by hype, and it was not a collapse. Instead, it was a year of stabilization. After years of volatility, scandals, and regulatory pressure, DeFi entered a phase of maturity. Growth slowed, risk was reassessed, and capital returned carefully. In this video, we will examine how DeFi performed in 2025. We will focus on Ethereum, BNB Chain, and Solana, and we will analyze stagnation, security incidents, challenges, emerging trends, and what the future may hold. Stagnation, a data-driven view. At the beginning of 2025, DeFi activity appeared stagnant. User growth was slow, yields were low, retail interest was limited. However, on-chain data tells a more nuanced story. By the second half of 2025, total value locked in DeFi exceeded $200 billion. Ethereum maintained approximately 60% of total DeFi liquidity. BNB Chain and Solana experienced steady, organic growth. Ethereum remained the core infrastructure of DeFi. Lending protocols such as Aave continued to dominate. Liquid staking became a foundational component of the ecosystem. Most user activity shifted to Layer 2 networks. Ethereum prioritized stability over experimentation. This reinforced its position as the most trusted DeFi settlement layer. BNB Chain. BNB Chain performed well in 2025. Low transaction fees and fast confirmation times attracted retail users. Decentralized exchanges maintained consistent trading volume. Yield farming returned in a more sustainable form. Growth on BNB Chain was gradual rather than speculative. Solana demonstrated strong network usage. Despite lower total value locked, transaction volume remained high. Decentralized exchanges and automated trading strategies flourished. Solana positioned itself as a high-performance DeFi environment. Overall, DeFi in 2025 did not expand rapidly. Instead, it recovered cautiously. Security incidents and hacks. Security remained one of the biggest challenges. Throughout 2025, several high-profile exploits occurred. Smart contract vulnerabilities, bridge exploits, private key compromises. Losses reached billions of dollars across the broader crypto ecosystem. Importantly, most attacks were not caused by blockchain failures. They were caused by poor contract design, inadequate audits, overly complex systems. Ethereum and BNB Chain remain the most targeted networks. This is largely due to the concentration of capital on these chains. As a result, security became a top priority in 2025. Protocols increased spending on audits. Bug bounty programs expanded. Upgrade schedules slowed to reduce risk. Obstacles and challenges. DeFi faced three major obstacles in 2025. Regulatory pressure. Governments increased oversight. Stablecoin regulations were introduced. Compliance requirements became clearer. DAOs faced new legal uncertainty. While regulation reduced speculative activity, it also attracted institutional participation. DeFi began transitioning from an experimental space into regulated financial infrastructure. Reduced yields. High-yield opportunities declined significantly. Token emissions decreased. Risk-free yields became more competitive. This forced protocols to adopt sustainable revenue models. Speculation gave way to efficiency. User experience limitations. Despite progress, DeFi remained difficult to use. Wallet management was complex. Bridges introduced risk. Gas fees and transaction failures discouraged new users. User experience continued to limit mass adoption. New direction for DeFi in 2025. Despite challenges, DeFi innovation did not stop. Real-world assets. Tokenization of real-world assets accelerated. Government bonds, treasury bills, and funds moved on-chain. Institutional capital entered DeFi through regulated products. This reduced volatility and increased credibility. Cross-chain infrastructure. Interoperability improved significantly. Stablecoins became natively transferable across chains. Liquidity fragmentation decreased. Cross-chain functionality matured. Artificial intelligence integration. AI tools began supporting DeFi workflows. Examples include automated trading strategies, risk analysis systems, on-chain data interpretation. Fully autonomous AI agents remain early stage. However, foundational infrastructure was established in 2025. Liquid staking and restaking. Staking became a core component of DeFi. Liquid staking tokens increased capital efficiency. Restaking experiments explored shared security models. Although yields declined, staking became safer and more reliable. Conclusion: 2025 was not a breakout year for DeFi. It was a necessary one. The ecosystem stabilized, security improved, speculation decreased. Ethereum remained the dominant settlement layer. BNB Chain